What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is March 24th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are, and in today's video, we're not only going to be talking about the really strong sense of confidence we're seeing in cryptocurrency markets, as we've basically made up for all the losses from the sharpest sell-off in Bitcoin's history for the last few years, but along with that as well, I want to spend some time talking about the current developments with COVID-19, ignoring a lot of the short-term noise, and really just talking about what we need to watch for in the long term, and why I believe even though we may be able to start getting back to work in the next couple of months and maybe start going back to a sense of normality, that this is going to certainly set us into a Great Depression of some sort, much more larger and drawn out than a normal recession. All right. So we've got a lot of things to talk about, so let's go ahead and dive right into it. I know it's not a really positive topic, guys, but again, it's something that I think we need to reflect on in this case and really just talk about what really matters at the end of the day, right? Just trying to observe from what we can understand in the world. Now, taking a look here across the board of the market here, very few plays here beating out Bitcoin here, leading up the market up 9%. Now, most cryptocurrencies are obviously following in that path to the upside, but we do have a few clear winners that are leading the market here. Engine as well, Ren, we also have two of our other top plays, Energy and Chainlink, with a few other cryptocurrencies like Nano as well, really killing it right now, doing well. Vast majority of the market right now up in the green with very few players down in the red. And we can see here as well, if we take a look here at the Fear and Greed Index, there's something that's very important to take into mind, and that is that even though markets have resurged, a lot of the losses here from the sell-off we had at around 8,000, going all the way down in about a 24-hour period, possibly pushing to 24, 48 hours if you really want to extend it that far. It really wasn't. It was pretty much an all-a-day. We can see here we went all the way down to 3,600. We have now recovered over $3,000 of value per Bitcoin from the absolute low, and generally speaking, from the kind of close range here around 4,500, a good amount of price here, about $2,100. So it's good to see, right? Bitcoin has definitely regained a lot of these losses, and I think it proves to a few key things here. Well, first off, as always, guys, the thing I always emphasize is during those peak times of fear, when people are at the verge of believing, oh my God, Bitcoin is over. It's the same kind of, I guess not only ironically enough, the same price action that we saw back during December of 2018 when we started to press towards 3K. We were 80% down from the highs at 20K. People were just reaping over the other. They're like, oh my God, Bitcoin is done for, right? When people start talking like that, and there's not much of a fundamental reason as to why price is down, rest can be assured usually that this is a time of irrational fear, and that markets will soon therefore correct themselves afterwards, and buyers will come in for the discount opportunity. At least the smart money will, right? And you can be a part of that smart money if you want, right? I'm not saying that every dip is going to be worth buying, right? But when you have significant corrections, when you have some of the most stark corrections you've ever seen, that's usually the time to get a little bit more bullish than you might have been beforehand. If you were willing to buy Bitcoin at 10,000, boy, are you going to love it when it's down at 36 or 3,800, right? I mean, your risk to reward profile is so much more favorable if you still have that target range of 50 to 100,000 as a possibility, even if it's just a fraction of a possibility, right? So anyways, that's just kind of logical investing and trading 101. But another thing that's important to note as well here when we take a look at this is I'm looking at the ScalpX index, which is a really cool website that aggregates a lot of indexes. But one I wanted to look at is the Fear and Greed Index. And interestingly enough, the Fear and Greed Index, which is probably one of the more interesting kind of aggregate indicators here, similar in some ways to the Fear and Greed Index that I think CNN Money had put together back a while ago for traditional equities. Interestingly enough, is showcasing us here that the market isn't showing any signs of greed or being overbought. In fact, right now, we're at some of our lowest levels we've seen on record. We haven't been back here. I mean, for example, just to give you some perspective, both of the last few Decembers were always good buy points, right? December of 2019. Fear Greed Index was only down here to about 21. And along with that as well, back here, when we were in peak fear after the sell-off in November to December, right, we were tailing around here at a point range that's even higher than where we are right now, right? So again, you've got absolute fear throughout the market right now for the most part. Many people aren't bullish on cryptocurrencies, and it tends to be that usually the contrarians win out in this case. The smart money tends to win out. And who knows if that's really where we are right now? Who knows? Maybe we might have another pullback. But I got to tell you all, for most kind of large-scale buyers here, right, you're at 6,600, right? Over the last few days, if you had the opportunity to buy Bitcoin anywhere from 4 to 5,000, you were buying at more than a 50% discount from those relative highs just back here in February, right? To see Bitcoin performing this well afterwards showcases me that people are looking for a non-correlated asset to hedge against inflation. And quite frankly, maybe Bitcoin isn't the store of value asset that many people want, or doesn't have the kind of a lack of volatility that people would want, but you're going to see in a store of value or in a hedging asset that there's going to be a lot of volatility during this time period, because there's probably going to be a lot of people wanting to buy it. And in some cases, after very strong rallies, you're going to have people who are cashing out and going out to cash and all kinds of different things going on. Guys, these are volatile times. Take a look at, if you don't believe me, right, if you think volatility is a lacking, I guess I would say, if for a store of value you believe there cannot be volatility, take a look at one of the most time-tested, store value assets here. Gold going all the way from 1,700 an ounce down to 1,459, and then going right back up to 1,600. Does that, remove the value of gold as a store of value? No, because in the daily time frame, as much as this is volatile, and again, is just about as significant as Bitcoin's move, we're just focused on a very small market. On the monthly chart, gold's still way up. Gold, just like Bitcoin, has generally set higher lows and higher highs on a longer term time frame. And that's what we care about. That is what defines a store of value. A store of value is an asset that I know I can purchase into, and I can know at some kind of later date that it is most likely that I'm either going to be able to get my money back or make a profit. Those are the only two things that a store of value needs. Generally higher lows and higher highs. And a hedge generally against things like inflation or other real world types of assets that are correlated to world economies, things of that sort. Some way where you can preserve your purchasing power. Gold and Bitcoin both do that. And again, I know we got a lot of silver bugs as well. I'm not trying to rub this in, guys. It sucks. I own a little bit of physical silver and gold. All right, this has been a bad week for assets across the board. All right, if you want to take a look, again, we could always hop over here, take a look at to equities. I mean, I don't even need to pull that up. I'll just go ahead and pull up S&P 500, right? This is my general target range here, 50%. But even just dragging it out to here in 2 months, the entire U.S. equity market down about 35%. You think that's normal? It's not. This has been one of the most dramatic sell-offs we've ever seen, guys. The biggest rushes for cash that we've seen in history. And no one is safe in this environment when it comes to financial assets. But now it seems like the worst of that kind of cash run has come out in this case. Not saying that we can't see equities sell off worse, as we've been looking for about a 50% decline in total. But along with that as well, gold, silver might still get a bit of hindrance here, same with Bitcoin. But I think generally speaking now, we can see people rebuilding their positions. Gold and silver building up, Bitcoin building up. These are the assets that should be performing well in a market where people are rushing, in this case, they've gotten into their cash positions, right? And they're looking for something that's going to hedge against what's to come. And the thing that's on a lot of people's minds is inflation. I mean, we have been hearing about central bank monetary policy that's going to be injecting mass amounts of cash in the economy. We're hearing about mass bailouts, so the government is going to be using taxpayer money or money that's coming from the treasury, the issuance of new treasuries in this case, in order to finance new debt and credit into the system. And it is going to increase the monetary supply by a very, very large margin. In this case, it's going to be huge, right? We don't know exactly what that headline figure is. It would be silly for us to say we knew what it was, because quite frankly, in the last week alone, those numbers have been increasing quite steadily. You have people like Anthony Pompliano, for example, who believe it's going to be up to 5 trillion. You have some people who are naming anywhere from 7 to 10 trillion. It's crazy. And the biggest factor that's going to determine all this is what's going to happen in the sense of our response to COVID-19. Is this going to become just a simple few months that we have to deal with this, or is this going to be a year and a half issue? And that's where you start to get those big spreads in the figures of what we're going to have to supplement to the economy. All in all, though, right, those questions really can't be answered too much. And we will talk about it in just a moment for what we do know. Long story short, though, we're hanging around the stock to flow model, guys. We've made a good recovery here over the last few days from the gap that had been spawned after the gap, or not really so much a gap down, but after the large sell-off that we had in Bitcoin, one of the biggest sell-offs we've had in the past 7 years of price action. we've finally gotten closer back to the mean line here on the stock to flow. So this is what we want to look for here, guys, right? We want to get back up here to around 8,000, right? And then after that, provide Bitcoin some time to reflect through its market price the shock to the supply within the supply and demand ratio in this case, right? And that comes with the halving event in May, which the stock to flow is accounting for here. So we're still on pace, guys. Don't lose sight. I know there's so much noise in the world, but I can tell you this, just to provide some perspective, I always bring up that point about how the halving really can't be priced in until it happens because most people don't understand the halving event. Just think right now, guys, like the sheer amount of discussion around something like COVID-19 versus the halving event. Right? If you know about halving, right, if you know about the Bitcoin halving, if you know about the halving event in any regard, or even just Bitcoin, you are in a small minority of investors. Just imagine when people hear that Bitcoin, this new asset, is starting to rally yet again. And eventually at one point, I don't know when this is going to be, it's probably sometime in late 2020, we'll be getting above its all-time highs, right? Late 2020, early 2021, we're back above 20K. It's the only asset that's up net for 2020. If Bitcoin sticks to the stock to flow model, that's what it's telling us it's going to do, right? So if it does get to there, what do you think is going to go through the minds of investors? It's the same thing that went through a lot of investors' minds, like myself, when I was starting to look at buying my first position in Bitcoin. Right? I had known about Bitcoin for years. I got interested when it broke its all-time highs again, right? We got back up here in January. I was very, very excited here in this case, and that's when I really started reading up, building my positions in this case. Right? I've been keeping up with the market in 2016 as it was getting closer and closer, but this is where I got really excited. And that's what finally made me pull the trigger and actually get involved in cryptocurrencies more actively. And the same thing will happen here for institutions. That sparked the retail wave. Now it's time for the institutional wave. And there'll be a lot of retail investors as well. But it's going to be the institutional capital that brings us up to $1 trillion market cap. Multi-trillion-dollar market cap. So very, very excited about that, guys. Going on here, though, wanted to talk a little bit. Sorry, I actually don't want to go through this today. I was just reading that personally. One thing I wanted to talk about, though, is taking a look here at futures right now. The reason I'm taking a look at CNN Business is investing.com for some reason wasn't pulling up the data. But for right now, it's looking like futures markets are up about 4%. And this is supposedly coming from confidence of Congress and the Senate and eventually the president passing a bill to provide relief. This is not only going to be the system that deploys paychecks for a lot of average Americans, but along with that, a lot of bailouts for companies, a lot of short-term credit lines for a lot of companies. You name it. It's a lot of different things. And the issue right now, as much as the futures are reflecting this up 4%, which makes me curious. It makes me curious if someone knows something I don't. At the end of the day, nothing's gotten passed so far. And we're having the same kind of a latency that we had back in 2008. Because you've got a few key issues here, right, guys? First off, what's optimal to put in a bailout, right? Now, you put, for example, you and I in a room, right? You know, you the viewer and myself. We could probably agree on a lot of things. We can also probably disagree on a few things, or maybe want to prioritize certain things over one another, right? And the good news is with a bailout, right, you know, government can run up and rack up as much debt as it wants, right? It eventually becomes an issue, but really there's no limit on this bailout. The issue is that people probably don't want a lot of funny money going out to things like it did in the last bailout. And the big issue here is that we don't have single issue bills, right? So like we don't have a bill that focuses on one specific thing, like giving a bailout to a specific company, right? So you could vote, for example, I want to support maybe the general things that you and I would support, like maybe subsidizing some healthcare costs, or, for example, providing relief to the CDC, or maybe providing, for example, lines of credit to certain companies. I'd be in favor of a lot of those things. But you know, then there starts to be things where you start giving favorable money to certain companies that don't really need it, corporate welfare in some shape or form. And also as well, there's a lot of policies that are getting shoved in now that just seem very partisan in this case. And it's basically leading to this almost near endless negotiation during a time where a week can mean everything for people's pockets, the global economy. You know, we're really seeing Congress and the Senate goof around here and not be able to come to a conclusion on just simply passing a bill that makes sense. But then again, that's how Congress and the Senate and the general federal body for the United States has been working for the last few years, so it comes at no surprise. But long story short, right, so we have nothing passed here. And at first, again, unless there's something I don't know, this seems like very hopeful response here, in this case of hoping to basically receive some kind of funding in the next couple of days. But I want to go ahead here and talk a little bit about the case data here for COVID-19. And I think one of the best places we can look at right now is really ground zero in this case for COVID-19, and that's Italy, right? Going ahead here, taking a look at Italy on the map here, all the deaths bundled in here to this dot here. Sorry, not just deaths, these are active cases, my apologies. So total confirmed cases is 63, almost pushing to 64,000. Total of 6,000 deaths, which is really tragic. Luckily, good news, majority are recovering now. And existing right now, we have over 50,418 cases. Now, if we, for example, just focus simply on the confirmed cases here against the deaths here, the scary thing is we're pushing, near a 9 to 10% death rate here, right? Now, again, this number will dwindle as time progresses as you have a larger amount of cases confirmed that are probably tested, right? In this case, again, we're still trying to ramp up testing across the world, and that'll give us more testing cases for people who might have it right now who may not know, may not need to be hospitalized. So that's the good news, right? It means that on average, not up to 9 or 10% of people are dying, right? Sad news here is that this is still a lot of people. And right now, there's some good news here in the sense that Italy over the last 5 days has set another consecutive low here in the sense of new cases, which is really, really exciting stuff. But there's something important to take into mind here is that Italy and many countries right now are already pushed to the brink. They're not ready for the next kind of exponential jump here in the sense of cases that they have to hospitalize. It's a little less than 25% that have to be hospitalized. And the thing that I want to emphasize here is that even though on the chart, we've actually seen a little bit of a downturn now, thanks to Italy taking stark measures to quarantine individuals or just basically keep people indoors, right? Or basically self-lockdown in this case across the entire country, where they even, funny enough, they had mayors going around just like literally shouting at people and just saying like, stay inside, like, But the major thing I want to emphasize here is this chart, right? We can see here that right now over the last few days, I apologize, I have to move my mic a little bit. We can see the cases are declining right now, which is really positive news. But this isn't, again, a signal of absolute confidence here because we've had drops before. And it can be because of a few different things. One, lack of testing equipment. B, it could simply be in this case that we aren't conducting as much tests as people are now quarantining for the most part or self-isolating throughout their homes. And along with that as well, it's just simply a flaw within the chart data in this case. We need to see that there is a systematic sense of control across the board before we really get too eager or too confident. And the major thing that I want to emphasize again is that point that Italy right now, right, is already being pushed to the brink. Other countries are going to be where Italy is in just a couple of weeks. It's going to be a matter of a week and a half when we really start to see it. I mean, we're already seeing right now in the United States, for example, I know this, nurses are working 24-hour shifts. I know people in my area, close friends and family and stuff, who either themselves or through their friends work as doctors and nurses, and they're working around the clock right now, 24-hour shifts. This is not a laughing matter, guys. This is serious. And the really sad thing, and the scary element of this, is that if those nurses and those doctors and medical professionals catch COVID-19 working in the environment, it is only going to further apply pressure on our medical systems in the United States. Bear in mind, COVID-19 is not the only thing that needs to be hospitalized. If someone's a cancer patient, if someone is in a severe positions, whether they have some other form of disease or disability, there's already enough demand in the system that's been difficult for people to keep up with. You can talk to anyone in those industries, and now they've got this on top of it. And many of them are lacking the necessary respirators in this case, the necessary gloves, masks, medical equipment that they need to do, or basically need in order to do the proper job. So at the end of the day, what really matters? It's the logarithmic chart. The logarithmic chart for cases is picking up exponentially like it was in China. And the scary thing is if we get anywhere near the growth factor we had back here, this is going to be extremely deadly. It's not only going to be deadly, but it's going to set us up in a position where we better start praying for some form of vaccine. We better start praying that there's going to be some kind of solution that's going to actually be able to save us from this, because it doesn't seem people right now are taking the proper precautions. Just to give you a little bit of sense here of how fast this is growing, guys. We're not even in April. This is back here in late January. What does the rest of 2020 unfold here? Is there going to be any other issues outside of COVID-19 that we have to deal with? I think markets are still too confident about this. I still think people generally, you see kind of just in the sense of the arrogance that some of us have, that I don't care about it. I'm going to go out. I'm going to go do the same things that I did on my day-to-day basis. And no one thinks about, who's really at stake here. It's not just elderly people, folks. People my age are at risk. Anyone in their 40s, 30s, 20s, you guys are at risk too. That's a new revelation. I want to make that very, very clear. Over the last couple of weeks, it's become very clear, especially at Italy, there's a good number of cases that are young, everyday people. And even if you make it, right, if you don't die from it, the pneumonia that people are getting, the struggle to breathe as you're gasping for air without proper respiration technology, I mean, it's just, I don't know, it terrifies me personally, guys. I've really, over the last few years, guys, worked at being much better at just being able to spot when there's just kind of noise, and also when people are underestimating things. This is still being underestimated by world governments, by organizations and companies, and everyday people. And anyone who's thinking in the short term, I hope, feels the ramifications of not taking action earlier. By playing arrogant, by kicking the can down the road. I know many of you out there who are watching this are doing your part. I'm not trying to ramble on it about you guys and stuff. I know you guys are definitely in tune with this if you're watching these videos. There's a lot of people who aren't. A lot of people just don't get it because it hasn't hit someone they know. And until it does, they're not going to probably care about it. But by that time, when it's hit someone we all personally know, it's likely that not only many others have gotten it, it's a good chance that you could get it. And that's the thing. It has to get to that point before people really realize it. This needs to be something that's taught in school. We need to learn about how to deal with pandemics. I'm highly impressed by what's happened in Japan and South Korea and Singapore. That is what it is like to flatten the curve. We got to respond to these things quicker, guys. Anyways, I've rambled on enough. I know that this has been a pretty dark theme here, guys. But one thing that I do want to emphasize here, going back to crypto markets, is really just focusing in here on trying to, again, plan ourselves here, to position ourselves, right? The next thing that I'm going to be really focusing on in the sense of my positions is I will be building some precious metal positions. I will be looking to possibly buy some equity positions as equities continue to go lower. But right now, my number one priority still is cryptocurrencies. And one of the things that I wanted to talk about today is through our sponsor, Clio, building a strategy that emulates to some degree our squeeze momentum indicator. Now, Clio, in this case, again, is a relatively new platform in the grand scheme of the overall space. They've been around for a good, I think it's about a year now. I think that a year and a half. I talked with Kevin that they've been working on this. I could be off on those dates. But I wanted to spend some time to talk about a little bit of a strategy that I built that's actually quite successful. In fact, it beat out just normally hodling Bitcoin. And it's one that emulates two different indicators here that are close to basically the SMS indicator we've built. It just takes into factor two indicators: the momentum indicator, which is a little bit different than the lazy bear squeeze momentum indicator that we use on TradingView, and along with that as well, the stochastic RSI, using the stochastic fast here in this case. Now, basically what we built here for the rule is when momentum is up by 20% in the last day, and the stochastic fast is below 20 in this case, so we're coming from the lower band here, the stochastic RSI, meaning we probably went through a sell-off or a pullback recently. In this case, we're going to buy Bitcoin with our full position, and we're not going to take full profit until 100K, because that's our long-term target, our HODL target. And then along with that as well, to close the position, if the RSI is down by 5 points in the last day, and momentum is down by 5 in the past day. Now again, bear in mind, this is not 100% in line with the squeeze momentum indicator, but the philosophy is still the same. We're going off of a daily time frame versus a weekly, which is what we tend to use. And along with that as well, we've cut out, in this case, using the MACD. We're just using the momentum in the stochastic fast in this case. Now I want to go ahead here and take a look real quick, if we go ahead and actually take a look at the performance here, backtesting results, we can see here that this has actually performed quite nicely, up 276% over the backtesting period. If you go back to the same time period and stuff, we've actually beaten out just hodling Bitcoin in this case. So really interesting indicator here. Good amount of trades here as well. It's not just, again, hodling it. A good amount of trades going on here on the actual trading strategy. And again, I went through a few iterations in this case, but coming out with a 63.3% return is pretty cool. I think this was a pretty well-performing strategy. And again, you can see a chart with the trade history here, how the profits are looking here. Most of them are profitable trades, right? It's a very interesting strategy. Now, one thing as well, again, you could go here and you could type out the same exact thing, guys, and modify it to your liking. You might want to set a stop of some sort outside of just a close condition. You might even want to do different variations. One thing I was thinking about doing is where we used to have this, we generally still kind of have the standard where the majority of indicators in this case, we have to have 3 out of 5 points. Basically, a majority in this case, a 2 out of 3 majority, originally from the base original indicator that I made. We could have different combinations where maybe you do one where when momentum is up by 20% and the MACD is curving up above maybe like the bottom baseline of the MACD, or like, sorry, when maybe it's curving up against the other line, things of that sort, or maybe it's up by a certain amount of points, you could do that as well. So we could really fledge this out and again make it as complex as we want, that looks for all the different kind of edge scenarios that can happen between the different indicator combinations. So you can really let your mind run wild with this, guys. But again, I recommend, again, test out Clio if you guys want. If you're interested in doing things like algorithmic trading, this is how you do it without having to learn R or Python or these different data science based languages. It streamlines the whole process, right? And they give you a lot of data and flexibility to work with here. You can pull from so many different data sources, some that you don't normally have access to on TradingView, right? So again, really recommend you guys check it out. It's free to test it out. And if you guys want to try one of the paid plans, you can look at what it entails and stuff throughout their pricing plans. But anyways, that's it for the video, guys. Thank you all so much for watching. Hope you all enjoyed this one. If you did, drop a like. And I hope you all are staying safe wherever you are. Above all, guys, I really am thinking about you at this time. I hope you and your loved ones are doing okay. I know these are definitely dark times, generally speaking. I think we have to be frank about it. But the best thing we can do is come prepared, stick through this together, and make the best of what we have right now. If you're, again, staying with family in this case, make the best of it. Enjoy your time with them. Enjoy this time to reflect and get away from working 24/7. And just stay safe above all, guys. All right? So have a great day wherever you are, and I'll see you all in the next one. Stay tuned.